Welcome to today's video. Before beginning, please read the trade disclaimer. Please understand that this is not financial advice, just my commentary and opinion. Hello everyone. Welcome to this free series in regards to chart patterns. So what we're going to be doing is looking at a geometric representation of different chart patterns for buyers and sellers. Looking at those different patterns and see how they potentially work out, fit, and where we would potentially expect price to go based on those patterns. We also need to understand that as patterns occur, they occur in different stages. So first of all, let's start off with a basic pattern formation and take it from there. So in this particular case, what we're going to do is see basically price come from the low to the high, okay, and then we get a rejection down. And what we're doing is we want to see where price could potentially go, okay. So in effect, looking at this movement where prices come from the low to the high and to down, what we want to then see is effectively we had buyers here, sellers stepped in, prices come down, and we wait to look for a potential push up. Then as price comes down, we get a move up, okay. As the price moves that up, what we want to see is where it could potentially go. Now this can be in the form of a particular pattern. So in this case, price comes to the top of the previous high, okay, and then effectively bounces back down from here. And so what we're trying to do is we're trying to determine where the next potential area we want to look at where price could potentially, come down or potentially break out from. So here we've got two highs, okay? So in these two highs, we can take a natural trend line, make it, across, and you can see you got two taps to the upside. Now, the other thing what you then can do is as you have a natural trend line at the top, what you want to then look for is where does price retrace down to, and is there any sort of confluence. So in this sort of case, you see price bumps down to potentially this lower trend line. And so naturally what we expect is that price could potentially bounce off here to this high over here. Now, in this sort of format, it's relatively simple. This is just for a demonstration purpose. Naturally, you could look at this and say, "Oh, that looks very easy. It can be profitable, etc." But this is just giving you an idea to see price comes up, rejects, comes down, makes a low. Then it doesn't make a high, makes an identical high to the previous one, comes down, makes a higher low, and then potential target would be the higher if we get the bounce. Now from this point, what we can see is, do I buy on this breakout, or do I wait for price to come back down? Do I buy from the low, from the lowest bottom side of the triangle? So we're going to cover all these aspects. Although, this looks very good, very simple, what you need to understand that trading patterns like this won't make you straight away profitable. Because at the end of the day, you will need some kind of confluence. You also need to understand where one would potentially put a stop loss order, and also where one would put a take profit. So let's move on to our first pattern that we'll look at, and we'll go through in this section triangular patterns. Okay, thank you.